Energy worst performing sector today. Oil breaking below $80, down nearly 4%. Take a look at that. Jason Snipe, you got Chevron, you got the XLE. You had a sector pick in our summit. Chevron's at a 52-week low today. What's happening here?
Yeah, obviously a Chevron stock. I mean, Chevron, the chart is an ugly chart, right? So it's
ever since earnings.
Ever since
right?
Earnings. Ever
Oil's
since
below
earnings.
its 200-day moving average today as well.
You got it. You got it. And I do like the acquisition of Hess a couple of weeks ago. I think that will be long-term accretive to the stock. I mean, but the stock's down 20%. You know, the 200-day was at 161. I think it's trading at 143 right now. So not happy about it, but I do believe the structural, tailwinds of the supply and demand mismatch still do exist. And I do think that will be a play for the energy stocks, but the earnings have not been great. And what I will also say about energy, just the greater complex, is free cash flow is an important factor for me. And a lot of these stocks have a ton of free cash flow, so they have optionality in what they could do with that. And that's why I still own energy, XLE, as well as Chevron.
Down near 4%, Jimmy, on the week. Is that space? Quarter to date, excuse me, down 8%. You got Cheniere, you got Transocean, you got Exxon, and you're pretty overweight this space.
Yeah, I'm overweight because I'm still bullish on it. I agree with what Jason said. At the heart of this, there is for the next year likely to be a supply-demand imbalance. When we talk about these imbalances and a deficit, sometimes it's like less than 1 million barrels a day out of global oil demand of 100 million barrels a day. But the thing is those small numbers matter. There's no place to get them. And OPEC doesn't look like it's going to open up the spigots anytime soon and help. Unless you have the recession that some people are still calling for, that demand is going to be there, and it's going to promote energy prices to stay at this level. What I think has gone on with the space, honestly, is this whole year, it's been up and down and up and down. It's gone nowhere. It's a consolidation of the prior 2 years, in my opinion, of just a breathtaking run. And I think that breathtaking run after this year is going to pick up.
Liz?
Yeah, I mean, I wish I could offer something juicy here and disagree, but I agree actually with what both of them said. I think supply and demand is going to drive this going forward, and that's coming from somebody who is cautious on the economy.
Yeah, that's what I'm saying.
Where demand should fall apart and be a problem. I think this has been and will continue to be driven much more by supply constraints than demand breakdown. And in a year where energy has been a laggard in the S&P, coming off of a year, to Jim's point, of up 60%, I think valuations still look attractive. Earnings have been tough, but I think they will come back, because if that's the worst of it, then we're on the other side. And with supply constraints, you've got that feeding into margins as well.
Well, I mean, the wild card, of course, the Middle East.
Of course.
The dynamic on prices can change in an instant. Weiss, you don't own anything.
I don't.
In this space at all.
The problem I have with the space overall is that the speculators and the speculation in oil prices always overcomes fundamentals, both to the upside when the stock's trading higher and when it's trading lower. So that's the issue. Now, I think part of the reason for the sell-off is that so much money piled in when we had the issues that started in the Middle East, with the belief that Iran's going to come in, or there's going to be a further tightening of capacity in the Middle East, and that has not happened. On the other hand, if you read about it, while Russia came out and said we're holding the line on the cuts, you also read other things say they're cheating, that they're actually shipping a lot more oil. So it's such a tough sector to analyze. And given where oil prices were for the last quarter and the performance the companies put in, despite buying back a lot of stock, I don't know how you can buy this on the fundamentals. And I do believe that a recession will cut demand. So, no, I'm not there.
It's like there's been so many counterintuitive plays in this market. What happened on, October 7th, you're like, well, oil could easily go to 100. Here we are with a 7 handle. All the issues around rates, the economy, you're like, well, the market's in trouble. S&P is around 4,400. Dow's above 34,000, and the Nasdaq's almost having eight days in a row. I don't know. Message in there somewhere.